It is 7 o'clock, so I guess we'll get started with our program today. And again, good morning to all, and glad everyone could be here. Again, we thank our specialists who bring us the update, and also this morning we've got Wayne Cleveland, who's the executive director of the Texas Sorghum Producers Board, and we're grateful for him being here with us today. And I think there's a lot of good information that will transpire in the next few minutes. So with that, again, want to thank our sponsors, the Texas Corn Board, the Cotton Board, and the Texas Grain Sorghum Producers Board. So as our sponsors for this event. So with that, I'll turn it over to Dr. Robinson.
Okay. Let me try to share my screen. All right, hopefully you can see that. Good morning to everyone. Here's where we've been this morning so far. I've taken to putting a slide like this at the beginning of all my presentations just because the cotton market has been so variable and volatile and unpredictable morning by morning. So towards the end of February, we capped off what was a really, really long upward ride, taking old crop futures into the 90s and new crop into the mid 80s. And then we have come off of that and had a bit of a reset, and the market still seems to be finding its way. So this morning, the new crop December futures are trading a little above 83 cents. So that's where we are. So let's talk quickly about how we got there and what may be coming. Part of how we got there is we've had a continued tightening in our supply and demand balance sheet. What we got in the March WASDE report was a little bit unexpected. We did get more tightening, but not as much as the market was anticipating. They didn't cut as much. I'm going to flip to here. They didn't cut as much from the production side as people were thinking. I think there's still actually maybe some trimming left to do on the old crop, the 2020 size of the 2020 crop, which for them to be adjusting it now is unheard of. It's really late for them to be tinkering with this number, for there to be a question about it, but I think there still is a question about it. There's about a 90,000, 100,000 bale gap last I looked between this number that USDA says the production is and what another part of USDA says has been ginned. And so if that discrepancy doesn't get resolved, then this number probably has to come down. So we may wind up with this being 14.6 million, which will whittle away at the bottom line if that happens. The other question with when the WASDE came out, and it's a question today, is what the pace of exports has been pretty good. We're at a historically high level, and I'll show you that in a second. And so there's some question about why this number is not higher. And of course, if this number gets higher, then that'll whittle away at the bottom line too. So either way, with less production or increased export demand, the bottom line may shrink, and it may well shrink down to 4 million or 3.9 million before it's done. And that just means that things are getting tighter, and that justifies fundamentally the strength in prices that we've already seen up until now. All right, here's a picture of the export demand. This is the beginning of the pandemic. This is the resolution of the U.S.-China trade dispute and the phase one deal that gave us that rally. And then we had the pandemic that gave us that recession. And then we had big purchases by China, the quasi-government entities within China, perhaps building their reserve back up. We don't really know. But that buying triggered what has been the most massive rally since April, since a year ago. We've had that. And like I say, now we're in this little reset pattern. Along the way, we've had these big purchases, which, they coincide with that decline in price and some of these minor dips in price along the uptrend. But once we got up into here, prices are, historically high levels here, and we were still selling 250,000 bales a week, which seems to me to be a lot of cotton to be selling at such high price levels. That's what's bringing the thought that maybe USDA's target is too low. This slide makes you wonder what you're looking at there, a pile of spaghetti spilled sideways on the table. But what this really is just it's a picture of how our exports are. Here we are halfway through the marketing year. There's 52 weeks. We're a little more than halfway through the marketing year, and we have sold 96% of the cotton that USDA projects that we're going to export. We've already sold it, which suggests that, well, maybe USDA's target of 15.5 million is too low, because we've still got a long ways to go. If we sell anything from here forward, then the target is probably too low. So this is good news. That's good news. It's a picture of solid demand. The other thing that's been influencing the market, it influences the grain markets too. It's had a big influence in the past. Again, here is speculative selling there and there that caused that big crash in prices with the pandemic recession, and then buying by speculators here that helped fuel the recovery in prices. And here we are now. You can see that, speculative positioning, speculative buying kind of leveled off. And right now we're in sort of a slight selling. You can't really see it that well, but there's a slight dip, some liquidation by these speculators associated with this drop in prices. And so the question, as always, is, well, what are they going to do? What are they going to do this week? And, we don't really know the answer to that, because we don't know what's in their head. They're worried about the stock market, the bond market. They're worried about international events. They're worried about taking prices. They're worried about what their computer tells them in buy signals and sell signals, and all that's rather hard to predict. But I will say this: if these guys get back on the bandwagon and get back to buying at that level or that level, they have the capacity to push the market right back up. New crop into the mid to upper 80s, and old crop back up into the mid 90s. It could happen again. It could happen for a particular reason with the old crop futures that I'll talk about in a second. Let me shift gears and finish up. I still think we're going to plant somewhere maybe 12.5 million acres, kind of what USDA was thinking at their outlook for them. And if that happens, as dry as it is, I think we're going to have pretty high abandonment. So my outlook is basically colored by these numbers right here. And this is all just a projection, but higher than average outlook and a yield that results from losing all the dry land. I think we're going to probably produce 15.5 million bales and carry in a small amount, have an 18 million bale supply. And then if we have a 20 million bale supply, but then we're going to export and domestically spend 18 of that. So I think we're going to be left with something very tight, 2 or 3 million bales at the most of ending stocks, which is historically tight. In percent terms, it's tight. And statistically, that would be associated with a rather high price at harvest time. So we may be bouncing around, back up to the mid 80s, back up to the upper 80s, and settle down back in the lower 80s by October, which is, again, a historically high kind of price outcome. But there it is. That's what pencils out if you have this kind of outcome. So we'll just have to wait and see. So I was talking about the December here. I think we're going to be trading from the upper 70s all the way up into the upper 80s, pushing 90 cents. I think that's quite possible. The old crop futures, I think, have the chance of going back to the mid 90s and maybe even going over $1. That's going to be associated with just some market dynamics settling out the year. All that export sales business is hedged, and those merchants and mills are going to have to buy back those hedges. And if they do, they may be buying them back with a shortage of selling, because the speculators aren't selling. Nobody's going to be selling to the merchants when they want to get out of these positions. And so there may be an inadvertent squeeze happen that shoots these old crop numbers over $1. If that happens, I mean, you know, if you got bales, sell them. Don't think that this has anything to do with the new crop outlook. This is just sort of a passing phenomenon. And that's all I have. So I'll hand it off to Mark.
All right. Thank you, John. And Bobby, we ready to go? We'll just move on.
Yes, sir.
All right. Let's see if this will
Keep rolling.
okay. I hope you can see that slide okay. You know, we're trading in the grain world on many of the same dynamics and concerns that Dr. Robinson just touched on in cotton. As we look at the grain outlook for the new crop year, I'm going to base that primarily on USDA's projections and their outlook for them, and certainly get more revisions to those kinds of numbers here over the next few months. But so much what we're going to talk about on grains, I'm going to start with corn and then we'll go to sorghum, is hinges on the activity that we've seen in the export market. That seems to be the linchpin in terms of supporting the kind of price activity that we've seen in grains. So starting right there on this is the corn, looking at the WASDE numbers from March, and then compare that to the Outlook Forum numbers that came out there about the 19th of February. Looking at the production first, USDA in their initial kind of look at the 21 crop, they raised acres from 90.8 million last year to 92. That's consistent with some of the private forecasts that we're seeing now that are starting to come out. I think one of the major firms came out with a 92.8, I believe was their number, but it's certainly ballpark to what USDA has kind of thrown out as an opening salvo in the answering the question of acres. Of course, we'll get the prospective plantings report on March the 31st. So by the time we meet again, we'll know what the farmer survey said in terms of planted acres. The real change in production would come from a yield increase if we go from our 172 bushels in 2020 up to what would be more of a trend line yield for 21 of almost 180 bushels per acre. That would be a 7.5 bushel per acre increase. That raises production compared to last year almost 1 billion bushels. So we would go from 14.1 billion to 15.1 billion bushels of corn. However, that is significantly muted when we're carrying in 400 million bushels less than the previous year. So with that smaller pile of grain coming into the marketing year, that only changes the supply then into the 21 marketing year by just over 500 million bushels for corn. And then we jump down to what they expect for use next year. Well, we have a 550 million bushel increase in supply and a 500 million bushel increase in use. That doesn't change the ending stocks very much. Now, the use numbers are changing primarily on the domestic side with some rebound in feed use. Also, we see higher numbers for fuel, for ethanol. This 5.2 billion bushels is a significant increase over last year, but still not near where we were 2 or 3 years ago when we were looking at 5.4, 5.5 billion bushels of grain for fuel. The increase next year expected to still be an increase, but only about 5.2 billion. But I think an important number in these on the use categories is maintaining these exports at all-time record high levels. 2.6 billion bushels is a record for corn exports in a marketing year, and USDA is keeping us at that number and nudging it up just a little bit for 2021. So what we're talking about is sustaining corn exports at these record high levels. One of the factors that brought us to this record high level of exports in the current marketing year was a short crop in places like, in Argentina and in Ukraine, two of our major corn competitors when it comes to the global export market. Brazil's crop is still projected to be a little larger than last year, but we're still seeing growth in that market. So will we be able to maintain that type of export pace if those countries return to some normal level of production? I think that will be the question. And of course, the other question around that whole issue, not only on the production of corn, but also the supply, in that those exports are driven by activity from China. Now, corn gets shipped all over the world, but the increases in China in the current marketing year are the one that are really driving the market activity that we're seeing. And we'll talk about that a little bit more in just a few minutes. Is that pace of imports of grain by China, is it sustainable? Does it make economic sense? And so we'll talk about that here in just a minute. And so all those numbers combined, USDA is projecting a slightly lower season average farm price. In March, they were projecting $4.30 for the old crop and then $4.20 for the new crop. But virtually, you can see that the stocks to use ratio is unchanged, days of use on hand, virtually unchanged, very low change in the price. So supported by a larger crop, but supported by increases in use, maintaining the very tight situation we have in corn. Now, grain sorghum is a very similar situation. We're seeing an increase in acres. We're seeing yield, however, actually maybe down a little bit. That 73.2 bushels per acre is above trend line. So if you're projecting some kind of normal yield for next year, you'd actually back off that yield number a little bit. And I think that makes sense with some of the dry conditions we're seeing in western Kansas, of course, the Texas Panhandle, and Oklahoma Panhandles. So yield back down to trend line, and increase in acres. We're bumping production and supply up almost 70 million bushels when it comes to grain sorghum for the new crop year. And what are we doing to use? Raising it 70 million bushels, and all of that going to the export market, taking those exports from 295 million bushels up to 365. And again, that's feed used to China is what is driving those increases. So again, ending stocks number, very little change. Stocks to use ratio actually gets a little bit tighter when it comes to grain sorghum. But basically, we're using everything up that we can produce, and sending that to the export market. And then USDA is projecting, even under that scenario, maybe a small backup in the season average farm price, maybe 10 cents a bushel, but still maintaining these relatively high levels. $5 in the old crop, and they're projecting $4.70. But again, contingent on this strong export demand coming out of China. And I think this is what's very interesting to look at as we consider what are the feed grain possibilities when we look at if China is needing feed. And one grain that is not included on this chart that I couldn't find a price series for was barley. China imports a lot of barley for feed use as well. But it's interesting to look at what's happening. These are prices that are out of the Louisiana Gulf for soft red winter wheat and corn, and out of the Texas Gulf for grain sorghum. And we're seeing, of course, that sorghum was trading at a discount to corn back at the early part of last year. And then as those prices then began to surge, we saw that premium being reflected in the grain sorghum market. And now we're looking at these prices where the most expensive feed grain on that chart is grain sorghum, followed by wheat, and followed by corn. And why would it make sense that the prices, that would be such strong export demand, when the prices would seem to reflect that grain sorghum would not be priced competitively compared to those other feed grains? And of course, the problem or the issue being the tariff rate structure of grain going into China. That wheat and corn imports above a certain level face a significant tariff of 65%. And so if you get above a baseline import level, any grain coming in according to their policy above that tariff amount that's allowed at very low tariffs, it comes in as taxed at 65%. And policy-wise, that's 7 million metric tons of corn. Anything that comes above 7 million has that 65% tariff. Current projections are that China will import in this current marketing year 24 million metric tons of corn. So that's 17 million metric tons coming in above that 7 million metric ton level. And so if that's being taxed at 65%, grain sorghum is price competitive until it's priced 65% above the price of corn. And so it kind of explains why they can pay so much for grain sorghum if those other feed grains are facing those kind of restrictions. And grain sorghum and barley come in tariff-free. There are no tariff rate quota systems for sorghum or barley, but they do exist for wheat and for corn. And we're above both those levels at current export sales projections for wheat and corn right now. So I think that's going to guide us moving forward. Of do those policies stay in place? Do they need that much feed? And will that continue to support that kind of premium in the sorghum market? That's what's been going on in corn. This is from the lows way back in August. And of course, the surge we've seen even through here the first part of March. Corn market has perhaps backed up a little more and significantly than we've seen in several months. We had quite a bit of setback there in late January. And now this is a moving average, the 10-day moving average. We dropped below that in yesterday's trade and then on Monday. So perhaps that's typically seasonally we would see that some softening in prices as we go into March. Doesn't mean this thing is over, but certainly I think it gives us a little pause to at least consider what are the factors that have supported the drive in prices to this level. What's the likelihood that those will continue to be sustained? And that is from planted acres to production in South America, production in the Black Sea region, as well as that export demand coming out of China. So just kind of summarize where I think we're headed. If you look at next marketing year compared to this marketing year, certainly I think our production numbers are going to be up in the feed grain complex. Use categories, domestic use in corn is up, sorghum probably steady, but total use looks like it will be higher, and holding ending stocks at these relatively tight levels, unless one of these factors that are supporting those kind of numbers change. And we see a lower season average farm price at this point, somewhat lower. As long as these fundamentals stay strong, I don't see a collapse in these markets as we go through the early summer and as we move toward the fall, but certainly perhaps some downward pressure. But again, watch those key factors that are going to unfold as we go through this year. So that's what I brought to share this morning. Be glad to take any comments or questions as we move along. Always good to be with you, Bobby, and appreciate the opportunity to share.
Again, thank you, Dr. Welch. A lot of good information there. And as you said earlier, we'll segue into Mr. Wade in Cleveland, who's the Executive Director of Texas Sorghum Producers, and welcome him as our guest this morning. And grateful that he's able to be with us. And I'll turn it over to him and let him get started.
All right, guys, appreciate it. Can you guys see my slides okay?
Yes.
Okay, I guess you can hear me good. So you heard my question. So appreciate you guys. I'll go through these slides pretty quick. You guys, of course, familiar with my granddad in the mid-30s. I show this everywhere. Still own that place, still farm it. We're seeing a lot of good stuff going on in China. Still visiting with customers this week, coming up to Lubbock, Texas, where the wind's blowing 37 miles an hour right now. It's kind of funny, you think the politics have settled down. I've been giving our members that go with us on these trade trips to China and around the world a hard time. If we invited you to go with China this year, if you think politics aren't still alive and well on the global storefront, China's actually been testing all the Japanese diplomats with an anal test. So giving our farmers a hard time. If we invited you to go, you're kind of our token COVID test guy, but still a lot of tension over in between China and Japan and Taiwan. So we keep your eye on that geopolitics. Again, here's our chart that we show quite a bit. This is a traditional total exports of grain sorghum, total U.S. production, as well as average marketing year average price. So you guys can see over there as we taper to the right side, the amount of exports that we're having right now have been really good, strong year. It's in the top 3 years in the last 20 years. So they continue to be very robust. Of course, the Chinese took a break because of their new year. So they quit buying. They all go on vacation, and then they started back buying. So it's pretty good stuff here. Here's a balance sheet, which Mark went through, Dr. Welch went through a little earlier. We're looking at probably about a 20% increase in acres. The yield, of course, will go down because if you look at the drought monitor from the high plains in Kansas, which is the big producing region, those guys are in a pretty severe drought right now. Really no hopes of getting out for the next couple of months. Looks like El Nino will come parking in there, but that puts our production around 441 million bales, as listened to Dr. Robinson, 441 million bushels, which is a good increase, 25% increase or so from year over year. But visiting with our customers, what they really want to see is us double our acres. Of course, that would drive down the price. But as far as a projected market out into past the coming 18 months, which we think is a pretty legitimate time frame to look at that market, looks pretty good. We're going to need all the grain sorghum we can get. Here's some points of interest just for China. 90% of grain sorghum went to China last year. That's even more than our record year of 2017. So it shows the robust buying pace. Still, the growers tell us that one of the top things is non-GMO. That's still an issue with China. They're kind of biting their lip on the corn that they're purchasing, but they still continue to purchase it. The absolute largest marketing factor here, and if you have an indices that you want to look at or a marker you want to look at that is kind of a deal killer, take a look at the TRQ, which we don't think is going to change. There's zero TRQ on grain sorghum. So we can export every single kernel we have, and there's not that price aside from the value added tax. Corn has the 7.2 million TRQ, which they're well past that as far as commitments. They've almost tripled that. So take a look at the TRQ situation. It's very significant. After 7.2 million metric tons, which is about what we've shipped to China in corn, maybe a little better. There's 65% tax on that. So as Dr. Welch pointed out, that's a real good pricing point. Largest limitation again is acres. We get lots of calls on what acres are due. China will develop their own GMO corn and soybean. There will not be GMO grain sorghum. They're just, it's just not that important to them to spend that money. I will tell you that in the last 2 months, there's been 3 technologies announced for grain sorghum over the top. Weed control. So those guys will all be at our annual meeting next week. We'll talk about a little bit more. As far as trade deal, the Peterson newsletter says we've hit 86% of our target for grain sorghum. So clearly they're looking out past that. And corn is still continues to rise in value in China. It's around $11.25 a bushel now in the northern provinces of China. You still got to keep your eye on the broader politics. WTO, these are interesting statistics that Patrick Wade found for us, is that 80% of all non-trade cases at the WTO tribunal are found in our favor. Those are non-ag, but of the ag trade cases, 76% are in other people's favor. So that's a good marker to keep your eye on, because as these prices continue to escalate on all commodities, what these other countries will do is they'll file a suit. Mexico continues being Mexico, banning glyphosate by 2024. They actually shipped a load out to Japan through their western port, Topolobampo, which was interesting. These are the markets that we continue looking at, continue doing work in. And then, finally was our comfort here with the Democrats. And you got to keep your eye on the sustainability word. It drives me crazy. It drives all of us crazy, but it's something that the Democrats are starting to harp on. It's one of Secretary Vilsack's priorities. Of course, sustainability, we tend to think of it as roots, if you will. The root goes down into the dirt. It takes carbon with it and it sequesters it there. So we've got a lot of good research on grain sorghum, on our footprint, as they call it, our green footprint, how much energy it uses to put it in and take it out. Everybody else is the same way, but I feel like with this administration, it's going to go much deeper than rotational crops. This is going to go back to permanent grasslands and things like that. So you keep a really close eye on that, because there's going to be a lot of ability to rotate some of your lesser cropland into that. Of course, that's a concern for us because we tend to not be on the prime farmland. Again, those are pictures of China. Here's another marker you need to keep a really close eye on. Is the top one is corn markets. These are weekly sales and exports. All of this is going to China. They've basically committed to the left there. I think there's a little better than 17 million metric tons now. I think they're actually around 20 million. But they've only actually shipped 7.9 million metric tons, which As you guys are well aware, China has in the past turned boats around. They did this with the anti-dumping case with sorghum. They turned 17 boatloads full of grain sorghum around and sent them back perilously into the Pacific Ocean, which caused, of course, a market crash, which started the trade wars. So keep your eye on that. That's really important because they know the difference between commitments, which is at $17 million, versus shipments. There's a big difference. Again, here's a little chart that's a little easier to digest. The top one is U.S. export inspections. That's a week of March 4th. You can see out there to the far right is the percent change year to year. Sorghum's had 258% increase in exports year to year, which is huge. Everybody's seen a really good increase, which is really good for our economy. There at the bottom, you see our exports as far as going back to 1975, those years in the 80s, and some of those have more to do with farm programs and pricing. Of course, now our price is USDA raised it to $5. That's what they think the growers are going to get, which is just huge. So looks like we're going to have another very robust year for grain sorghum sales. We're having our annual meeting next week at South Padre Island. You guys are invited. We have a really good lineup of people coming. In particular, we have probably one of the top marketing experts in China, Dr. Brian Lomar, who works for the Grains Council. Good mix of everything. So if you guys want to come down to that, again, update on the seed technology, have some really good speakers. COVID restrictions have released a little bit. So it looks like we have about 65 people coming to our meeting. So Bobby, those are my comments. This is my family right there. I told some, I don't know if it's y'all or another group, that little guy in the front is the sixth generation to set foot on there, but he actually never set foot on there because everybody holds him. So little guys actually never touch that dirt, but he will someday. So a lot to be proud of. I was there yesterday feeding, taking care of the cows, and pretty good history. So Bobby, appreciate it. And if any questions or comments, my cell phone number is right there. We love to talk grain sorghum, and I love to just talk. So you guys feel free to give me a call, but appreciate the format.
Well, we greatly appreciate you being on with us this morning. Like said, there's a lot of things happening in the cotton and grain markets, and to hear it from people keeping an eye on it and getting some good information. We've been getting a lot of views. A lot of times we don't have many on in the morning, but so far we've had quite a few views as we put the video out. So I think
Yes,
a lot more people are seeing it than we think, but it's usually 30, 40 views after we turn
Yep.
it off and get it put
Yep.
out. So the information is getting out. So we're greatly appreciated for you being on this morning. Dr. Welch, Dr. Robinson, again, thank you all for your monthly commitment to this program. So with that, if there's not any questions, I haven't seen anything in the chat box. So I guess we'll sign off and go again at it again on next month on the third Wednesday. So